Good evening, everyone. We'll just wait for a few seconds. We'll wait for everyone to trickle in. But in the time being, thank you for attending tonight's webinar. And also introduce yourself so like that we get to network and meet amongst each other based on your business needs, what type of business you're in. You could put it in the chat, your name of business. And at the same time, if you have any questions throughout today's presentation, by all means, I encourage you to participate. This is an interactive webinar for you. You could put it in the chat or no, in the Q&A option. And then tonight's webinar is being recorded. So in case you have to step out, have dinner, by all means, we'll be able to send you the link for tonight's webinar along with the presentation. So I want to thank you all for attending tonight's webinar, and I'll proceed to Steve Armin from Branches to give you more description, more information about Branches and how we can assist with your business needs.
Thank you very much, Jesus, and good night, everyone. Really happy to be here and really happy that you guys have been able to join us this evening as well. Today, we have an incredible speaker with us. She has a tremendous history with Branches, and she'll be taking care of you in the webinar after I share a little bit about Branches and what we do. For some of you who are returning today, you'll be familiar with these slides. You would have heard me say it at least a couple times already, so please bear with me. This is really for those that are new, and it's an opportunity to share the good work that we do at Branches and give people an opportunity to reach out to us for the support that you're getting already. So permit me to share my screen. And today is a continuing part of the training that we started 2 weeks ago. It does relate to a training program that we have for the entire fall season, starting in September and ending in December. And you know, at Branches, we do have a system that we've been working with since 1973. Branches has been helping families, particularly those that are low income, find their way out of financial issues and problems, and help them towards financial independence. And to do that, we use something that we call people-centered design. In people-centered design, what you have is it's a two-level structure where we work with families. We call it the two-generation system. And the first part of it is what we call Grow and Climb. And in Grow and Climb, we work with the kids in the family from as early as elementary all the way up to college. And we work with them to help them progress through school successfully. And, we have systems in place that would help them with their schoolwork. We also have even a transportation assistance program to help them get to and from school. The other part of the strategic help that we give to families is in our Achieve department. And the microbusiness program is a division under the Achieve strategic component. And in this part of Branches and the work that we do, we work with the parents in the home. So we do work with the entire family, with the kids and the parents to help them again, come out of the situation that they're in and hopefully, end up in a place where they are financially independent. We have a 4-pillar system that we use for our business training program. As you can see, it's entrepreneurship, it's business systems, it's business intelligence, and it's digital transformation. Under entrepreneurship, what we do is that we work with you through consulting, personal consulting, as well as training, as well as opportunities to link with other businesses and stuff like that. We do have a comprehensive number of things that we do with a business to help them in the soft skills area of their development. We always say that your business will only be as strong as you are. So what we do is that we do have a component that focuses on your personal development as an owner. We believe that for you to thrive, you cannot only focus on your business, but at the same time, you cannot forget the responsibilities that you have for yourself and for your family and for the relationships, that basically is a part of your overall existence. So as we work with you on the soft skills, we also work with you on structures within the business system. One of the things that you'd realize is that most businesses fail because they tend not to focus on the things that give their business a sense of stability and resilience. Business systems is basically your standard operating procedures. It's how you do what you do, and it's how you do what you do and why you do it. So for instance, this month, we're focusing on the way you manage your finances, the way you manage money, the way you manage inventory, and it's all encapsulated under your accounting system. So the month of September is about accounting, and it's designed to help you improve one of the business systems that is so important for your sustainability and your success. Business intelligence is also a part of it, and this is the level of maturity that you use towards managing your business on a day-to-day basis. And it's an accumulation of all of the knowledge and experience that you gain as you progress through the various stages of building your business. So, you can have, I always, tell participants, you can have 1 year of experience 20 times, or you can have 20 years of experience. Business intelligence speaks to the latter, and it speaks to the accumulation of your experience and your knowledge as you grow and develop as an entrepreneur, and as you grow and develop your business. And both of those concepts are interrelated under business intelligence. Under digital transformation, we look at the link between technology and particularly your marketing, but also how you use technology to make your systems and the things you do more efficient and more effective. This month, as I was saying, is dedicated to your business systems training with an emphasis on business accounting. And today is the third in a series of webinars that is developmental. So you would have started 2 weeks ago. And what you find now is with each succeeding webinar, it's an elaboration of the accounting theory, an elaboration of the accounting principle, but we're getting more and more closer to its practical implementation. And today is where the practical part of it is centered. And it is going to continue next week with an in-person workshop where you actually use a tool that is designed to help you set up your structure and have an accounting system that is going to be good for you and your business. So today, our presenter, as I was saying before, we're really, really lucky to have her. She does have a history at branches. She's now based at the Florida SBDC FIU as a business consultant. And Yasne is, let me put it this way, her legend precedes her. So today, it's going to be really, it's going to be really interactive. She has a lot to share. She is going to try to get a lot done in the time that we've allotted for the meeting. So please, as she is speaking, feel free to, as Jesus said, put your questions in the Q&A and we will treat with them afterwards. So thank you, everyone, for being here again. And now I'm going to turn over today to Yasne.
Thank you. Thank you. Before I jump in, I'm going to give Jesus the opportunity to introduce the Navigator program. And I just want to say really quickly, I'm so excited to be here tonight. I can recognize familiar names in the chat. Thank you for the love. As Steve mentioned, Branches has a very special place in my heart. I work here for almost 5 years, and it's so nice to be back. I will be in person next week and look forward to seeing you in person for the Quickbooks training. But let me give Jesus the floor for the quick introduction, and then I'll be right back.
Perfect. All right. Thank you, Yasnain. Yeah, so a brief description of what is the Miami-Dade Business Navigator program. It is funded in part through the cooperative agreement from the SBA, which is a U.S. Small Business Administration, in which it was established in part of the American Rescue Plan Act of 2021, with the sole purpose to have the community approach to help you, the small businesses, in the economic recovery, in which the Florida SBDC at FIU is comprised as the hub, as a center of the network with spoke organizations that deploy the community advocacy to work with the businesses in the recovery and the resiliency, in which 51 grantees were awarded this exciting program, in which we were part of the tier 2, which is the state and regional level. So once again, what is the overall goal is to continue assisting you with the economic recovery, the resiliency, the pivoting, the new marketing, in addition with the new programs to assist and address any challenges that you're experiencing. The sole focus is to help businesses that are owned by veterans, women, as well as the socially and economically disadvantaged individuals. As such as what Steve has also mentioned as being part of the Navigator program as such in branches and the Florida SBDC at FIU. We also have Ascendus, the EDC of South Miami-Dade, the Miami-Dade Chamber of Commerce, Prospera, and Startup FIU Procurement. So you have a great access to 7 great organizations that are eager to assist you and work with you at the same time. And it's no cost to you. So it's a great opportunity for you to network and at the same time to learn how we can assist you as well. So once again, the full coalition of partners secured $2.5 million in part of this program to create that local community navigator network to assist once again you, the small businesses, in consulting, mentoring, and training as such you're in today. And once again, I will have our connect with us information in the chat, so that if you want to send us an email, give us a call, what exciting events we have, by all means, I'll be able to connect you and introduce you to our other consultants, our other spokes. And also, even if you want to pick our brains as what we can do to assist you, we're always a phone call and email away to assist you. Thank you.
Thank you. And now the fun begins. I'm extremely excited about today. I'm glad they actually put me towards the end of the program when it comes to implementation, because that's what I'm all about. It's important, and you've been developing that foundation of accounting, the concepts, and kind of warming up to actually implement. We got to get it done. We got to get organized with our numbers. And by now you understand why, right? So tonight I'll be providing more insights on the topic and specific tools of how to apply it in your business that we're going to continue next week with the Quickbooks training. So let me share my screen. Make sure it's working. Okay. It's been a few years all about Zoom, and I'm still struggling to share. Here you go. Can you see the screen?
Yes, we can.
Awesome. And as Jesus mentioned, the intention of this presentation tonight is to make it interactive. Please ask your questions throughout. I will be paying close attention to the chat, and Jesus is going to help me to answer your questions. Again, I'm Yasnain Montalvo, and today we're talking about accounting system for your micro business. I want to give you a recap. Maybe you've heard about this different type of accounting, the difference between bookkeeping, financial, managerial, and tax accounting. Today, we're gonna discuss also the accounting cycle and what does that mean in the application in your business. Double entry accounting, don't get intimidated by this line. It's just for you to get the idea of why things are how they are. But at the end of the day, we have technology to help us with that. So don't worry about debits and credits. I went to school for 4 years to learn debits and credits, and sometimes I still have to Google what's the debit and what's the credit in the transaction. Right now, systems help us keep track of this, but it's good to understand where it comes from, right? Most importantly, we're gonna discuss and show you the financial statements, because this is what it's all about. We do the bookkeeping, we get organized with our numbers to get information, and that information gets translated, if you will, through the financial statement. So you would understand the structure of the basic financial statements and how this is connected to your personal and business taxes. So my challenge tonight, is sharing all 5 topics in 40 minutes. So let's make it work. And the good thing is that I will see you next week, so we can continue developing this next week in the in-person training. So what is accounting? And at the end of the, in a nutshell, accounting is all about recording, keeping and retrieving your financial transactions. It's organizing your money in and money out. That's accounting. Don't get intimidated by the topic. Money in, money out, how we record it, how we store those transactions, how we retrieve those financial transactions. And that gives us numbers that help us make financial decisions. We as entrepreneurs, we have this gut feeling of we're going to start the business. I'm passionate about this. And we have this tendency to follow our heart. And it's fine, because it really, we have to have that internal connection, and it really takes us very far. But soon you realize that numbers also tell the story, and numbers help us make financial decisions, factual financial decisions. So yes, combining your emotion and the fact that the numbers give you is the best way to have a successful business. And the number, the accounting side of things, give us the information from the past that will help us influence the future. We don't need the magic ball. We don't have it. If we do, maybe we will all be billionaires by now, right? But we can use data to somehow redirect our path and use that to influence the future. And this is why we use accounting. What are the type of accounting? In a nutshell, we have the bookkeeping. If you notice, is the foundation of it all, right? Bookkeeping data. We need to keep track of the ins and outs in order to then get to the other type of accountings to analyze our numbers financially, to make decisions at the managerial level, to report our taxes. We need the data in an organized manner, so then we get to the next level. So bookkeeping is the foundation, and what you're gonna learn is different ways to keep track of that data, and nowadays ways to atomize the way you keep track of that data. Okay, so bookkeeping is all about recording the information, the activities, money in, money out. Okay, financial accounting is a summary of the financial information, right? So once you keep track of those records, money in and out, we use the financial accounting to interpret that. We get the profit and loss report, the balance sheet report, the statement of cash flows, and in a little bit, you'll get to see how it looks like and how the information is summarized through these reports, okay? Now, managerial accounting, it's fun because you get to see the details and the internal information that's gonna help you make financial decisions. And tonight, I'm gonna be sharing 2 amazing tools that are gonna help you be a better manager in your business. That's gonna help you really impact the financial decisions based on numbers, okay? And of course, tax, we all know Uncle Sam, and we need the reports to comply with the law. So these are the types of accounting. Number 1, bookkeeping. Number 2, financial. Number 3, managerial. And number 4, we have our tax accounting, okay? Why is this important? And you might know this by now, but I think the more we mention and focus on why we have to do accounting. Well, first of all, you want to manage your business. You work for business administration. You need to keep track of your customers, their payments, the suppliers, how are you paying your vendors, how much cash you have in the bank. You have to plan. And that means that if you're serving your clients, selling products, you need to plan your inventory ahead of time. You need to plan your cash flow needs. And if you're not there just yet, at some point in your business, you're gonna want to get access to capital and expand or, use the capital to grow your business or even to start. It's important to plan ahead of time because the reality is you want to ask for that money, not necessarily when you're like up to here and you're like in the red already. You want to ask for capital when you don't really need it right away, because otherwise to the lender, it's going to show like you're desperate. And if you're already in the red, what you're showing to the lender is you're not going to be able to pay me back. So when you anticipate and you plan in advance that you're going to have a cash flow need in the future, you're going to need to inject cash in your business early on. When you identify that early on, you can prepare accordingly and apply and get access to capital before you actually need it, okay? You need it for your external investors because, well, I was talking about lenders and they end up being an investor when they give you money, even you have to pay them back, but they're like kind of considered an investor, if you will, through loans. An equity investor, if somebody is investing in your business and they're doing it for a percentage of the business at a deeper interest. You need it for your taxes. And I don't think I have to tell you this. Here in the US, we deal with income taxes, we deal with payroll taxes, we deal with sales taxes, tangible property taxes. That's how the government lives. Let's just be real. So you need accounting to comply with the law. You need it to comply with other legal aspects such as contract, insurance, payroll. There are other types of compliance that requires that level of organization. And you need it, most importantly, to have a profitable business, to know whether you're making money or not, to understand how much you own. What is it that you own? What do you owe to other people? You want to earn money. And I can tell you, for those of you that might be at an early stage, right now you have a lot of passion and energy, and you do whatever it takes, even for free. But that's not sustainable. after some time in business, when you don't see your return on investment, when you see that you're not taking home what you deserve, you're not even paying yourself, believe me, at some point you're gonna hate yourself, you're gonna hate your customers, you're gonna hate your vendors, because it's not sustainable long-term to have a business that's not earning, that's not giving you a return on investment. So yes, you want to understand your accounting to understand your profitability, to have a profitable business, okay? So that's the main whys, if you will. And it all starts with keeping records. Have you noticed the bookkeeping data is the foundation of it all? And there are different ways to keep your records. Now, I want you to tell me in the chat, where are you in this spectrum of keeping your records? There are two ways to do it. You can do it manually. You can do it online using a system, right? Now, I want you to specifically put in the chat, where are you? Are you keeping your records in a shoebox, in an Excel file, in a notebook? Notebook, okay, that's twice. Something happened there. Are you using QuickBooks already? Are you using any other accounting system like an app, FreshBooks, Xero, Wave? All right, thank you for participating. I'm reading, so I see Excel and notebook, manually in Excel, an app, Excel, shoebox and computer, Excel, Square notebook, excellent, Square both, QuickBooks, Excel, notebook, Excel, excellent. All right. Any of you not keeping track at all, like you have it all in your head? I think I didn't put it here as an option, but you can say, if you have it in your head, you just put in your brain. So I know, and it's okay. I appreciate the vulnerability. That's where you at. If you don't have any of these systems, you have it in your head. So that's fine. Excellent. So this is a good start. So Melissa, thank you for sharing. You do have it in your head. Thank you. Thank you. Thank you. And it's the truth. Believe me. I'm gonna tell you something really quickly. And I give a lot of credit, regardless of which system you use, as long as you use something, as long as you're organized somehow, because it has taken you as far as you are today. And believe me, that's progress. I started my entrepreneurial life because of my family business. And we started a convenience store over 16 years ago, and we had no idea what we were doing. 16 years later, I already, went to accounting. I've helped my parents a lot in all these years. And now I do what I love, helping other people like my family business to get organized financially, right? But you see this? This is a notebook that my mom, actually, let me find one of a more complete. So you see really how it looks like. So here we have columns of numbers, right? And it doesn't matter how much I have trained my mom over the years to, implement QuickBooks and Excel and whatnot. For my mom, this is her system, right? It's just, she's old school like that. And you know what? At some point, I realized I have to give my mom a lot of grace for where she is and what she has become and what she has been able to do with her little business. Thanks to my parents, I went to school. I'm here today. I'm here to help you. I respect these notebooks because you know what? When people like my parents are ready to transfer to Excel or implement QuickBooks, the first thing I ask is, Give me your notebook. I know you have one. I want to see it because that has everything I need to know. So yes, whatever you are today, I acknowledge that it has served you. Now what I'm here is to help you maybe automatize it when you're ready, to save you time, to give you more clarity with the tools that are going to allow you to do that. And then I'm going to be developing more on that next week with systems like QuickBooks. So Excel is a great start. The notebook is a great start. The important thing is being organized, having the information somewhere. And then we make it better. All right, so thank you for sharing. And the reality is, what we want to see, whether it's in Excel, Excel and the notebook will give us the transactions. This is the first step in the accounting cycle. We're recording the transactions using that tool. Balancing our books, you will understand more about that when we review the balance sheet. But the goal of this accounting cycle is to get your financial statements. Now, the challenge with the notebook and Excel is that it's just a little bit more tedious to transfer that information in the format of a financial statement. And you learn to see how it looks like, right? And the financial statement is what the lender is going to want to look when you want money. Is what is going to serve you to report it in the taxes easily. And at some point, we want to see them, right? So very simple accounting cycle. You record the transactions. You have the transactions that happen, money in, money out. You record them using some sort of system. You balance that out. Let me tell you the good thing. Most of the systems do the balance for you. Okay, so technology, thank God. No, not necessarily for you to be thinking of debits and credits. The system do it for you. So you can generate the financial statements. This, I just want you to understand the concepts because it's very common in the accounting world for you to see these terms: profit and loss, balance sheets, debits and credits. Again, I'm not here to confuse you with these terms, but I want you to understand how it translates into your day-to-day. Okay. In your profit and loss, and you're gonna see the actual statement, I'm gonna give you an example, but in your profit and loss, you're gonna see your income, money in, and your expenses, money out. But why is accounting a double entry system? Because when the money comes in, it comes in the form of an asset or a liability, okay? When the money comes in, it comes in because somebody pay you cash or you got a loan, right? Somebody pay you for your products or services, or you got an injection of money through the loan, or you put money in the business, which is also some sort of asset, right? So if the idea of the double entry is that whatever happens in one side of the equation is gonna impact the other side. So money comes in, it has to impact whether it's an asset because you got cash, because you have a money pending to receive, because you got inventory, you pretty much, the income comes from that. And then, or it's a loan, or it's a contribution to the business. Now, when you spend money, the same thing happens. You either pay cash, or now you have a pending payment to somebody. So if you forget everything else about the double entry accounting system, just understand that one side of the equation influence the other side. And this is going to be much more clear when we get to understand the different aspects between assets, liability, income, and expenses, and how these all play out in your financials, okay? Again, not necessarily for you to be doing manual math, just know one thing impacts the other. And what is an income statement, or what is called the profit and loss statement? Pretty much that's gonna reflect this formula. Sales, your money coming in, minus expenses, money going out, is gonna give you your net income. If it's positive, you're making a profit. If it's negative, you're having a loss. It's that simple. And this is typically what you as entrepreneur pay attention to. Is going to be a summary or summarized based on a time period. For example, you can see your profit and loss in a weekly basis, in a monthly basis. You can see it for the whole year, because it's gonna give you, okay, what were my sales last week? What were my expenses last week? Did I make money last week? The same thing for last year, last month. You can choose the period of time when you use a bookkeeping system. Of course, it's a little more challenging to do it from the notebook, but when you use a bookkeeping system, you can actually run those reports just clicking a button, right? It's gonna report how much the business is generating. And it's gonna, as I mentioned earlier, report whether you make a profit or a loss. This is why it's called profit and loss. Hey, accountants are not that creative, you know? The title represents exactly what it is. Profit and loss statement. Now, on the income side, you're gonna have the sales of product, if you sell products, or if you sell services. For the most part, that's how we interchange our value, yeah, whether it's product or services. You have your cost of goods, which is the expense that costs directly associated with you providing your product or service. It could be cost of labor. It could be equipment, rental, shipping, supplies, and materials. I'll give you an example. If you sell pens, you had to buy this in order to resell it, right? So the cost of the pen, if you bought it for 50 cents and you sell it for $1, then 50 cents is the cost of goods sold. This is very simple with inventory, because you have to purchase to mark it up and resell. Now, if you manufacture products, then you have to take into consideration the supplies and the materials and the labor and all of the components for you to manufacture a product. If you provide services and you subcontract some of the labor, normally with services, you trade time and resources for money, right? So whatever variable cost directly associated with you providing your product or service is called cost of goods sold. Then we have operating expenses. And this is just a representation, but the list gets long. So I want you to put in the chat, based on your business, what are some of the operating expenses that your business have today? And this is some examples: advertising and marketing, business license, payroll expenses, rent, utility, supplies, office expenses, insurance, payroll. Like, the list can get long. Let's help me identify, or I'm going to help you identify some of the operating expenses that your business have today. Put it in the chat so I know where you're at. And I'm going to check. I think I had a question while you do that. All of them and more, of course. Will fees from Shopify drop shipment company be a cost of goods sold section? Yes. Yes. Yeah. Shopify, Amazon, and all of those, they will take their money before you get yours. So it's definitely directly associated. It tends to be a percentage of your income. So yeah, that would be cost of goods sold. Operating expenses is kind of fixed. When you think of operating expenses, think of if you didn't sell $1 in the next week, what are the expenses that you still have to cover in your business, regardless whether you sell or not? And those are going to be fixed expenses. You still have to pay rent, you still have to pay the utilities, you still have to cover those bills. So think of it like that. If it takes a sale for you to have the expense, it's cost of good. If it's not, and it's kind of a fixed expense, it's operating expense. So it really depends on your industry. And I see many of you responding in the chat, the type of operating expenses. Thanks for sharing. And this is helpful because it helps the other business owners in the room identify what are some of the expenses that you might not have think of so far. You will learn more about this next week when we go over QuickBooks, because they really give you a very complete list of all possible expenses, right? But yes, the list can go on. I see Patricia asking for, okay, so let me check a couple of questions. On what category you put Canvas, Adobe, Wix? QuickBooks normally give you an option for software and apps, memberships and subscriptions. So it really depends on, those are normally the categories you consider. So Adobe is like a software, Canvas is, you could put it on the marketing because it's associated with more marketing. The same thing with Wix. So you will learn when we go into QuickBooks how you can create accounts and sub-accounts to make it very specific. Like for example, yes, you have marketing and advertising, but within that, you want to know exactly how much you're spending in social media versus website versus, you know, print materials. So that gives you more insights. So, you know, yes, I'm spending all of this in marketing, but in what specifically? And that in the same with utilities, you want to know electricity versus water versus, you know, so we can be more specific with how we allocate the expenses. So it gives us the insights that we need to make decisions. All right, thanks for sharing. And the same with income, by the way. The income is good to also create sub-accounts. Like if you have different incomes, you can, like for example, this actually takes me right here. This is an example of a profit and loss. And if you notice, this is a landscaping business, and they have in income section different lines. So they know the income by landscaping services versus job supplies versus labor versus controls, pest control, you know. So by creating sub-accounts in income, you know exactly where the money is coming from. If you provide services, well, what are your different type of services? I want to know where the money is coming from. And your profit and loss, you run in cash versus accrual. And this term, just to simplify it, think of it when you finish the year, December 31st. If you provided a service, let's say using this landscaping services as an example, you cut the grass on December 30th. The client, you already went, you did the job, and you invoice your client on that day. But the client didn't pay you until January. Now, December 31st, you normally close the calendar year. The question is, when are you going to report that income? In December 30th, when you did the job and you earned that money because the job is complete? Or in January, when you actually receive the cash or the payment, whatever method of payment it was? It depends whether you use accrual or cash. Cash is saying it all. in the cash, you recognize your income when you got the cash, when it's in your pocket. So in that case, you recognize the income in January. For tax purposes, that income is gonna be next year. If you were following the accrual accounting, you recognize the income when you earn that income, whether you got the cash or not. So accrual will recognize that income on December 30th. So that's pretty much the idea. Most micro businesses use cash accounting for tax purposes and all of that, but it's always good when you have a system that can give you both, to analyze the numbers in both cash and accrual so you can make decisions. Okay, perfect. Patricia is asking, it will make a difference where you put it in, I assume, the different categories that you mentioned. It does make a difference. First, you want to put it in the category that is more aligned with the use of that expense. You can change the names to align them more to your business. And most importantly, you want to be consistent in the way you categorize it, so you can see month to month how much you're spending in each category. So it does make a difference. We align it also for tax reporting for the use that you give it to the expense. Okay, so this is how the profit and loss looks like. If you notice, it's income. It will give you your total income here. Your cost of goods get deducted. Then you get a gross profit. And then you have expenses, and more expenses. And that will give you the total expenses right here. You might have other miscellaneous income if you got a grant, if you got some credit card rewards, things like that, or miscellaneous expenses. We don't want to have much expenses under miscellaneous, because if it's a typical business expense, you want to give it a name. Otherwise, you have thousands of dollars in miscellaneous and you don't know where the money's going, okay? And the difference between income and expenses will give you your net income. If it's positive, you're making money. If you're negative, your business is having a loss, okay? So this is your profit and loss. And the balance sheet, as I said, as the name says it, make it very clear, is a sheet that gives you balances. What are those balances about? It will give you your balances of your assets, and that's gonna equal your liabilities plus equity. Now, what does that mean? I'm gonna give you a specific example so it's more clear. Examples of assets. Cash, the cash, whether it's paper or in the case if you have the money in the bank, it's considered an asset. Accounts receivable, that means money that you have pending to collect. You send an invoice to the client, you already deliver your service or your product, and they're gonna pay you at some point. That's an accounts receivable. Of course, your inventory is considered an asset if you own land, buildings, equipment. Those are considered assets. Then you have.
Yes, Nay. Afterwards, I just have a few questions about the income statement.
Sure.
If that's okay. Yeah, so in the income statement is where we list the different services we provide and what it generates. For example, in my industry, I would list the different transportation modes and then the money generated by each. Is this correct?
Yes. I think you got it straight. That's exactly it.
And then last but not least, I have another question here is when we get payments in 3 months from publishing company, I can choose to use it to be when I get it in later in the months as cash accounting system, correct?
Let me make sure I understand the question. Can you repeat again?
Yeah, so when you get payment in the 3 months from publishing companies, I can choose it when it could be used in the later months as cash accounting systems. Is that correct?
When you think of cash versus accrual, it's just a matter of reporting. But what I hear you said is you can choose as when to use the money that you receive for income.
Yes.
Honestly, you're the boss.
Yeah.
If you provided services or products and you earn that income and they pay you, it's your choice how you use that income, right? For financial reporting, the difference is, okay, the income is gonna show in cash because you already receive it. And it's gonna show in accrual as well because you already receive it.
Yep.
Now, if you're spending to get, if you're pending to get paid, it will only show if you run it in accrual for your open invoices. But your choice how to use the money is your business.
Yeah, because right here it said, what if it's 3 months go into the next fiscal year? Would this be an issue, even though the income technically came into the previous year?
Then it depends whether, if you use cash and you haven't delivered the services, let's say you did a plan for 3 months, they pay you up front, right? But you still have to finish delivering those services in the upcoming months.
Mhm.
If you use cash, you're gonna report the income when you receive it. If you use accrual, you will not report the entire income until you earn that income, until the service is actually delivered, right? So that's pretty much the main. If you have to think of cash versus accrual, is cash when you got the money, accrual when you earned that money, when you actually deliver your product or your service.
And then also, can you just go over again the balance sheet equation again, please?
Yes, of course. I need to get to finish it. So the balance sheet equation is assets equal liabilities plus equity. Okay, and this is gonna make more sense when you see the report and when you understand what is an asset, what is a liability, and what's an equity. So let me show you, first of all, what is an asset. You have cash, accounts receivable is any open invoices you have pending to collect, inventory, land, buildings, equipment. This is the value, the cost actually of your inventory, the cost of your land, the cost of your building, the cost of your equipment. What happens with those assets when you recording it for accounting? Then the inventory you sell, the land you can sell, but it could depreciate, the buildings depreciate, and the equipment as well, okay? So those are examples of assets. Liabilities are obligations that require payment in the future. So it's money that you have to pay. Accounts payable, meaning, okay, I got an order of 12 of bottles, but I'm gonna pay you next month. Well, in your books, it's gonna show as an accounts payable. You are required to make that payment in the future. The same with wages. If you have an employee and they finish working last week, but you have kind of that week of reserve, well, if you run your balance sheet as of today and you haven't paid your employee for last week's salary, then you have this wage payable. You have pending to pay next week. Taxes as well. On taxes could be sales taxes, income taxes, money, payroll taxes is the money that you have pending to pay the IRS. You're holding it for a little bit until you pay them. Credit card debt is a liability. Business loan is a liability. Unearned revenue, and this has to do with accrual. I just told you that in accrual, you recognize the income when you earned it. Well, what happens if I haven't earned it? Well, it's not gonna show in income in your profit and loss. It's gonna show in your balance sheet, right? So it's gonna show in one of those reports, profit and loss or balance sheet. All right. So these are liabilities, and your equity is the money that you have invested in the business, the distributions, the money that you have taken out of the business, or your overall profit over time. Why is this important? And I want you to, if you forget everything about equity, I want you to think of this. At the beginning of your business, you most likely invested money from your own pocket, right? In order to start. And you don't want to report that in your profit and loss because that's not a sale, that's not revenue. You are injecting money in the business. So that's considered an owner's investment. And you eventually want to get paid back, right? So when you get the money back from your business, you don't want to pay taxes again, like if you made a profit. No, you're just getting your money back. So this is why it shows in the balance sheet, because if you put $5,000 in the business, the balance sheet is going to show owner's investment of $5,000. When you get the money back, you start reducing that balance until you get all your return, and then you pay yourself, and then you report on those owner's compensation, okay? So this is extremely important, and it depends how you classify for accounting purposes. You don't want to pay taxes again, because if you had a job and you save money, you already pay taxes on that money. So when you put it in your business, you want to make sure that you're not paying taxes again. So this is why you have to put it as an investment. Hi, Aziz, glad to see you here. All right. So we don't pay ourselves until the end. That's another conversation, because I'm a big advocate of you paying yourself, of compensating for the work that you do in the business. I could have a whole nother class on pricing and profits and owner's compensation, because you do want to pay yourself sooner than later. You don't have to wait until the end. There is a big, I guess, belief that you have to sacrifice and put money in your business, and you're the last one that gets paid because that's what it takes. Partially it is, you make sacrifices, but you gotta put yourself first, you gotta put profit first, you gotta price for profit in order to have a sustainable business. So that's another class, but don't have to wait until the end to pay yourself. No, but when you do, you reduce it from owner's investment before you put it as owner's compensation. That's pretty much what I'm trying to portray here. Don't put it as owner's compensation, those very first payments that you're just getting your money back. So you don't pay taxes again for the money that you already pay taxes before you put it in the business. Okay? So yeah, pay yourself. Hey, I will talk about it all day. This is an example of a balance sheet. And if you notice, it first shows the assets, and it will give you the balance as of specific period of time. So if you run a balance sheet as of today, you will have the balance in your bank accounts as of September 20th, how much you have in cash, how much you have in accounts receivable as of today. This is why it's called balance sheet, because those balances might change tomorrow, right? So it will give you the cost of your inventory, the cost of your equipment as of that specific day. Then you have examples of the liability. What are your accounts payable that day? How much did you owe in your credit cards that day? Your business loan, your payroll taxes, is going to show in liabilities. And then in the equation, the equity is going to kind of balance it out between your contribution in the business, your distribution, and the retained earnings is pretty much the profit that the business has made year over year. Retained earnings is an interesting number that not many entrepreneurs look at. And from the lending standpoint, from the investment standpoint, they ask for the balance sheet because they want to know how much you owe. That will give you how much you own is pretty much the asset section because you have cash, you have inventory, you have equipment. That's what you own. How much you owe is liabilities. You have credit cards, you have loans, you have to pay your vendors, you have payables. How much you have to pay other people. They want to know how much you owe, right? Now, the equity in retained earnings is going to show you, have your business been profitable year after year? If your retained earnings is negative, that means that you've had a loss in the lifetime of your business. If your retained earnings is positive, it shows that your business have had a gain in the lifetime of your business. And if you've been in business for 20 years and you still have a negative retained earnings, that's concerning because they might be like, how have you survived, right? So retained earnings is historically what shows the wealth and the health of your business over time. Okay, perfect. Priscilla Simon, is the registration to your business? Well, that might not be. So when we get QuickBooks, good question as is. Well, I'm gonna be seeing you in person next week for the QuickBooks training. Looking forward to seeing you again. All right, we have, guys, this was not a class for 1 hour. I didn't get 1 hour, honestly. I got 40 minutes. So what do I do now? Should we stand a little bit for a few minutes? Should we maybe continue another day? I don't know. Do you have more time? What should I do?
Go for it.
I go for it. Okay, Melissa says we're listening. I'm here. Thank you. Thank you. This is exciting. And you know, when I get a class full of entrepreneurs asking me to continue, that's a good sign. So I haven't
and also if, and sorry to cut you off, Yasnay, in case if you have to hop off, that's fine. We're going to continue. This webinar is being recorded. So like that, you could definitely have it as a reference point as well. Okay.
Awesome. If you have a few minutes, please stay because this part is extremely important. This part, I wish they have given me like a class when we first started my family business, and we didn't get this class. It took me years to go to school and understand this, but I'm gonna give you the shortcut to what you need to know to be a real manager in your business and use numbers to make decisions, okay? So managerial reports, what does it give you? You wanna know what is your return on investment? You wanna understand how to increase your profitability, how to make your operations more efficiently, how to plan, how to control, how to evaluate your business operations. It's gonna give you the details and the information that you're gonna use internally to make decisions based on data, okay? That's what running a business is all about. And today, I'm gonna share 2 tools that are gonna be transformational in your business. But before I go into that, I wanna say some of the managerial reports include you got your profit and loss, great. But do you wanna know your sales by customer? Do you wanna know your sales by services, by products? That helps you make decisions. What product is selling best? Who are my best customers? I want more of those, you know? You can evaluate and analyze your purchases, your inventory. You wanna analyze your expenses by supplier, by service, by product. What is the period? What is my collection for my accounts receivable? Why are the customers taking too long? What can I do to improve the timeline that my customers are taking to pay me? Because that's impacting my cash flow, right? What can I do to then increase the time that I have to pay my vendors? Because really you wanna shorten the time that you get paid, but kind of increase the time that you got to pay others. That's business, right? This is what managerial reports give you. Insights, right? These tools, we're gonna be sharing the presentation, but are very eye-opening. And I'm gonna share why this specific calculator means a lot to me and to any business owner really, but what's the story behind it? I told you that my entrepreneurial journey started with my family business in a convenience store, right? So we sell all type of products, typical dollar store, not everything is for $1, but we have a variety of things. Now, my dad used to run businesses in Cuba, like his way of pricing was, okay, I'm gonna sell this pen and the pen cost me 50 cents. So they literally got the calculator and they'll do 50 times, and he said, I wanna make 40% profit in all these products. So he said 50 times 40, then he will mark it up based on that little calculation, right? 40%. In his mind, he was making 40% in the pens. But let me show you what the reality is here. The pen costs 50 cents, right? He wanted to make, he was marking up the product by 40 cents, by 40%. That's what you get in the calculator. So he said, okay, 40% markup, he will sell the pen for 70 cents. Perfect. But in his mind, he's like, I'm making a profit of 40%. No, you're not. Your margin is 28. What you gotta pay attention to is your margin, not your markup. Markup is how much you're marking up your product, but that's not your profit. So really, for years, my dad was thinking he was making a profit of 40% on all his products, and he was really making 28. I'm like, no wonder why you don't have enough money to pay the rent at the end of the month, right? So you gotta pay close attention to your margin. You might think that you're making a killing when you say, oh, 50 cents times 400%. I'm gonna make 400%. Well, yeah, your markup is 400, your margin is 80. Okay, so this is why you want to increase margin, and the number is big, the difference is big. So don't get confused by thinking because you're marking up a high percentage, you're making that much money. This calculator, life-changing. Price for profit. Price for profit. And the profitability is in your margins. This applies for services. This applies to anything you sell, right? Anything. This calculator, please save it in your browser and use it every day, because you want to also take into consideration the taxes and all of that, but price for profit, pay attention to your margins. All right, so I'm glad you're liking this. Yes, it's eye-opening. You don't need to remember the profit margin formula. Just use the calculator. I forget the formula too. So the other tool I want to share is the break-even calculator. Break-even. And wow, this concept might be very new for many of you, but the reality is you want to know how much products you have to sell in order to break even, how much services you have to sell in order to break even. And what that means, break even is to cover your fixed expenses. So you now understand the difference between operating expenses and cost of goods sold. So let's do a quick calculation here. Let's pretend I am selling pens, tons of them. I am in the pen selling business, okay? So the calculator is gonna ask us, do you know the total monthly fixed cost for your business? Oh yes, I gotta pay rent. Oh, well, let's say if you put yes, you have to put the full amount, but normally I like to put no, so they kind of give me a breakdown of what those fixed costs look like. They'll say, okay, yeah, I sell pens. I have to pay rent of $1,500. I pay salaries. hopefully. And if you want to know how much you gotta pay, how much you have to sell to pay yourself a salary, finally, please put your salary here. This is monthly. And you have to pay insurance, utilities, taxes, whatever fixed expense you have. And you already identified what those expenses are for your business. You want to list them here. And if they're not in the list, just put them here as other. Fixed expenses, whether you sell or not, you have to pay. Those are examples. So let's pretend I pay rent, I pay utilities. I would love to pay myself $5,000. And let's do an experiment. If I pay myself $5,000 a month, how much pens do I have to sell to cover my rent, my salary, my utilities, and pay myself $5,000 a month? Okay, so let's use that. Then we continue. It's gonna ask you, what is your unit selling price? Okay, I sell the pens right now for $1. Okay, I sell them for $1. What are the numbers of units that I am expecting to sell? Well, let's pretend I'm gonna sell 2,000 of those pens. Let's see, let's put a number. And then it asks you, what is your variable cost per unit? Meaning, how much did it cost me to buy the pen that I'm reselling? If I put yes, I just put 50 cents. If I put no, it's gonna ask me, okay, do you know your direct materials, your labor, your commission, your supplies, your freight, shipping? Those are variable costs. These are your cost of goods sold. Now you see how everything makes sense? Variable cost, cost of goods sold. So in this case, well, I pay 50 cents for the pens. Okay, great. I'll just do the math based on that. This is 0. It actually don't let me use decimals. Maybe I might need to use another example. You know what? I'm gonna use an example because this is a lot of pens. So let's pretend I still have those fixed costs, but I'm gonna pretend that I'm selling a service. I'm selling bookkeeping services, right? And I pretend that I'm selling, how many clients do I need at my selling price in order to break even? Let's pretend that's the math. Unit price, let's say I do bookkeeping for $300 a month, just in general, and 300, this is monthly, and right now I have 10 clients, just to say something, okay? My variable cost, well, for services, it's not that I'm paying for a specific product, but let's say that I pay my labor, and for each bookkeeping client, let's say my team invests $70 out of the 300, based on time, right? Just an example. So that's just my variable cost for service. This calculation will give me how many clients do I need. In this case, it's giving me 30. Saying you need 30 clients at $300 a month in order to break even, in order to cover your fixed costs. And what are those fixed costs? Rent, my salary. I wanted to pay myself $5,000. So if I want to pay them myself that much, I need 30 clients, right? So this you can play around with. It applies to services, to products, to anything, really. And the indicators of this formula is the price of your products or services, the fixed cost, fixed operating expenses, the variable cost directly associated with the product service, your cost of goods sold, and the units. So what's the reality here? You know what? I don't have 30 customers. I don't think I'm gonna get 30 customers anytime soon. So how can I improve this? Well, I gotta raise my prices. That's the only formula. You either raise your prices or reduce your expenses. So let's say I'm not gonna charge 300 anymore. I'm gonna charge 450. Now I need only 18 clients. That's better. And that's telling me that my contribution margin is 84%. Right now with 10 clients, I'm losing money. But if I had 18, I break even and get to pay myself. So you use this variability to price your products or services to kind of, let's say, you know, whatever, I'm not gonna pay 5,000 for now. Let's say I pay 3,000. So you reduce your fixed costs, increase your prices, increase the number of units, and you play with it in order to see what does it take for you to make it, for you to not only cover your fixed expenses, but actually have a profitable business. So it all starts with your margins. You got a price for margins. If you're selling your products or services at cost, you're not gonna get anywhere. It's just a cycle. And you got to plan how much you have to sell of what in order to make it, okay? So thank you, I love the comments. I love the comments, and honestly, yes, I'm an accountant by trade, but I'm an entrepreneur by heart. And these tools, I love sharing because you're not gonna remember the break-even formula, and you're not gonna do the math in your calculator. Just use this, you know, just play with this, and it will tell you when are you gonna break even. It will give you even techniques on how to reduce your break-even point, and there is no magic around this. You gotta minimize your fixed cost. You gotta reduce your variable cost, pretty much reduce your expenses, and increase prices. That's the only way. And this is why I'm a big advocate of making sure that entrepreneurs price for profit. Do not put a number in your prices just because the competitor is selling it at that much and you wanted to do cheaper, so you steal their customers. You have no idea if your competitor did this math. Most likely they didn't. Most likely they're not even making any money. Do your own math, focus on profitability, and you're gonna get your business to the next level. Otherwise, with low margins, you're not gonna pay yourself, you're not gonna be able to hire people, you're not gonna be able to spend. You got a price for profit. And this is eye-opening, so you know you gotta increase your prices like yesterday. Okay? Everybody's increasing their prices. You have to. All right. So awesome. Thank you for the comments. Feel free to post your questions. And now I'm just gonna go a little bit faster in the last part. These tools, you're gonna get the links. Please play with them and feel free to reach out if you need more insights. The last part of this class has to do with personal and business taxes. And I'm just gonna give you the real deal of how this plays into your life, both at the personal and the business level. First of all, I want to clarify. If you have a limited liability company, LLC, and you're just one member, one person in your business, you automatically, for tax purposes, are going to be reporting your income and expenses in what is called the Schedule C. This is the form that you're gonna use, and I'm gonna show you an example, okay? If you have 2 members or more, you're going to automatically be classified as a partnership for tax purposes, and the form that you need to complete is the 1065, which is called U.S. Return for Partnership Income. This is the automatic tax classification. If you just register in SunBiz and you get your employer identification number with the IRS and you don't do anything else, you automatically be in one of those 2 scenarios in case you have an LLC. 1 member, Schedule C, 2 members, 1065 for partnership. If instead of an LLC, you went to SunBiz and opened a corporation, you will automatically be classified as a C corporation, and the form that applies for that is the 1120, U.S. Corporation Income Tax Return. Okay? Now, If you've heard about the term S corporation, the tax classification for an S corp, you cannot go into Sunbiz and register for an S corp. An S corp is a tax classification. Okay, your LLC can be an S corp. So this is the automatic classification, but you can tell the IRS, you know, I have an LLC, but for tax purposes, I want to be an S corp. And then you will fill out a form. It's called the 2553, apply, and be considered an S corp for taxes. The C corp, if you leave it as is in Sunbiz and you don't do anything else, is going to be a C corp. But you can also tell the IRS, you know, I have a corporation, but for tax purposes, I want to be an S corp. What's going to help you make that decision? What are the benefits of you classifying your business as an S corp for tax purposes? Well, you will learn that today. All right, I see Fulton elected to be recognized as an S corp. Well, Fulton, if for some reason you forgot why, I'm gonna give you a refresher. Because there's very common for you to find accountants out there that tell you, oh yes, you gotta be an S corp, I'm gonna help you fill it out, but you don't understand why, and you don't understand the requirements of it. And this is why many business owners, as part of the pandemic, didn't qualify for funding because they were an S corp and they didn't pay themselves a reasonable salary. So that's one of the requirements to be an S corp. And I'll be sharing more insights today for those of you that can stay a little longer. If not, you can see the reporting. So first of all, yes, I'm going to be telling about what are the advantages of those classifications for sure, Priscilla. Excellent. So first of all, let me take you back to what this is all about. I'm sure you're all familiar with this form, 1040, income taxes, whether you got a salary or business income. At the end of the day, this is how you report your income to the IRS, right? In line 1 is going to show if you got a salary as an employee. If you had a business, that's going to be reflected in line, where did it go? Wait. And other income from Schedule 1. So line 8 is going to show other income. So whether you got the income from the business as Schedule C, S Corp, C Corp, is going to show here. Okay, now I'm going to show you in a little bit how the Schedule 1 looks like. But here you get your income. Your business gain is going to flow through your personal taxes, okay? Whether you are an LLC or an S Corp, it flows through your personal taxes because whatever gain you had, whatever distribution you had, at the end of the day, it comes here, right? So 1040, individual income tax return. This is the second page. This is a whole other class. I really want to give you just how the reports that you learned today, the profit and loss, kind of get translated into here, and for you to understand the difference between the different classifications for tax purposes. In another class, we can go line by line here, okay? So the Schedule 1 is going to be an attachment to your 1040 that is going to say if you had business income, you attach the Schedule C. So remember Schedule C, LLC 1 member, or if you are considered a sole proprietor, are you still reporting under your Social Security? You haven't registered your business yet. You would still report your income and expenses in the Schedule C. And it's gonna flow through here in line 3 to be reflected on your personal taxes, okay? Now, if you had an S Corp, or if you have real estate and trust, but most importantly, the S Corp, which is what we're talking here, is going to be reflected in line 5, whatever distribution you got from your S Corp, it also flows through your personal taxes. So it comes here. So regardless of what you are, is going to be reflected in your personal taxes. Now, This is how the Schedule C looks like. If you notice, it's very similar to your profit and loss. Actually, the title is Profit or Loss from Business. So you have to put your income, your cost of goods, your expenses. You pretty much translate the information from your profit and loss to here. And now you see the relationship, right? The same with the 1065. If you're a partnership, it looks pretty much the same. You have your income, your cost of goods, your expenses, translating profit and loss to the taxes. You don't have to be scrambling for your bank statements at the end of the year if you have your profit and loss. And how you get your profit and loss? Let's talk QuickBooks next week. Okay, so this is an example of a partnership tax form. This is an example of a C Corp tax form. Again, very similar. You got your income, your cost of goods. It has a little bit more lines because you might get income from rents and royalties, and it's a little bit more expensive, but same format, income and expenses. 1120S, this is the S Corp. It looks similar, income and expenses. But what is unique about the S Corp? And this, I'm going to answer the questions about the advantages of the classifications and the differences. When you have a Schedule C, let me take a step back. A Schedule C, whatever gain, let's say you have all your income and expenses, you had a profit of $10,000, just to put a number. Those $10,000 are going to be taxable. They're going to include in those $10,000, they're going to charge for Social Security, Medicare, and your income taxes because it flows through your personal income. You always pay income taxes, but the difference, the key here is that whatever gain you had is subject to Social Security and Medicare. So that equates to 15.4% of your net income, right? Because normally when you are an employee, you pay half of your Social Security and then the company pays half of it. Guess what? You are your business and you are your employee. So you have to pay all of it. At the end of the day, it comes out of your pocket. And it ends up being 15.4%. So net income from the Schedule C is subject to payroll taxes. That's considered payroll taxes, Social Security and Medicare. What is the same with the 1065? The net income is subject to Social Security and Medicare. Here, you will have to pay yourself a salary. So let's don't discuss this now. But this is the benefit of the S Corp. The net income from your business when you have an S Corp for tax purposes is not subject to Social Security and Medicare. It's not subject to Social Security and Medicare, meaning you have potential savings of 15.3% of all the gain that you had in your business, because guess what? It doesn't, the net income comes as a, oh, I didn't put the distribution, the K1. Okay, so the net income comes as a distribution of your business and it's not subject to that. But, you gotta be careful with that advantage. And the IRS pays close attention to the S Corps precisely because your net income is not subject to Social Security and Medicare. They want to collect taxes on that. The only way you can contribute to Social Security and Medicare when you have an S Corp is by being an employee of your business, by paying yourself a salary through payroll and deducting Social Security and Medicare out of your check, like any employer would do when you were working for somebody else, right? So this is why the IRS puts a rule and say, if you have an S Corp, you have to pay yourself as the owner of the business a reasonable salary. And write that down. Reasonable salary. And you report it here in line 7 as compensation of officers. The officer, the owner in an S Corp has to pay a reasonable salary. Why? Because if you don't, you're not going to contribute to Social Security and Medicare. And the IRS doesn't like that. Now, what a reasonable salary means, I don't know. I don't know how much to pay myself, but what is reasonable? It depends on your industry. It depends on your business. It depends on your financials. But you got to really address, if you have to pay somebody else to do what you do, how much will you pay that person? So it's really a gray line, but honestly, it does give you the opportunity to save on taxes if you are smart about it. If you pay yourself a reasonable salary, let's say you made $100,000 in your business and you pay yourself a salary of $50,000, that's reasonable. Now, what happened with the rest of the $50,000? Hey, that's a distribution. I say 15.3%. Great. That's the strategy, but you gotta pay a reasonable salary as part of that. Okay, so excellent. I know this part might take a little bit of, more of a vivid example and for you to see how it applies in your own business to process it. But I just wanted to kind of plant that seed about why the S Corp is beneficial, how you have the benefits to save on taxes, but you gotta be smart about it because the IRS doesn't like to see everything as distribution. It requires the structure in your business, the organization, to do your bookkeeping, to pay yourself a reasonable salary. And yes, you can benefit from the tax law and use and this is part of the tax form. This is how the balance sheet that we just learned today reflects on the S corporation. The Schedule C doesn't report a balance sheet, but when you have an S Corp and you have over than $250,000 in assets, you have to put your balance sheet here. So as you notice, the S Corp has the tax advantages, but it requires the structure, the organization, and the discipline to make sure that you're complying with the law. All right, so I've been responding to questions throughout. I don't know if there is more questions.
Yes, I have some. So what if you provide services? How do you calculate? Do you calculate per price? Per service, I'm sorry. So the question is, what if you provide services? Do you calculate per service?
For your break even, I assume.
I will assume so.
Yeah, I mean, you can do it globally, but I would love to see it per service, right? Because that way you know exactly, okay, how much clients do I need for this service, or how much of these services I have to sell. And then you do kind of an accumulation of your line of services. And at the end of the day, you do like a global break-even analysis. And the reason of doing it individually is because your services might have different prices. So it's good to do it individually to help you get there.
Okay. Okay, and how do you register your business on SunBiz as an S Corp for taxes only?
Well, let me remind you, as an S Corp, that is not through SunBiz. SunBiz is just LLC or corporation. S Corp is a tax election. And the way you elect to treat your business as an S Corp, you have to go to the IRS. You have to look for this form, the 2553, which is the election by a small business corporation. You find this form, you fill it out. Depending on your state, you send it to the right address via mail, certify, make sure you get it. I wouldn't advise to send it by fax. you have to fill out this form. And if you are in that process, I encourage you to reach out to the center, get a consultation with me or with another consultant so we can help you fill it out and make sure you do it correctly. I don't have time to walk. It's not difficult. It's just that I don't have time to walk you through it today, line by line. So it might be easier to support you one-on-one to fill it out. But is that really the process is fill out this form, the first 2 pages, and mail it to the IRS. Okay.
And then, is it possible, Yasnaya, to put the break-even calculator link in the chat, or you could email it to me, and like that, I'll be able to email it to all the participants as well.
Yes, it's actually in the presentation. You're gonna get a copy of these slides as well, but I'm gonna put it in the chat right now, both the calculator for break-even and the profit margin calculator.
Perfect. Entonces, also, do you have to make a certain amount for S Corp?
You know what? It's not a requirement, or it's not set in stone, really. What you want, what is gonna help you determine whether you're ready to make that step, if your business is profitable, if it's already providing enough net income for you to go through the hustle of putting yourself on payroll, sending the form, making sure you're complying. Normally the taxes for an S Corp are a little bit more complex, so the accountants charge you a little bit more to file those taxes. You have to make that decision depending on where you're at in your business. But honestly, it's not set in stone. If I have, the way I see it is, if you're making a profit enough to pay yourself a salary, then do it, because you can always play with the percentages. I started my S Corp from the get-go, and at the beginning, I didn't pay myself a salary, and it's okay. The IRS will give you some sort of cushion, but what you don't want is to be 5 years in business and still do everything through distribution. So it depends. I don't have a set amount, to be honest.
And then, at the same time, I know that you were talking about, like, you know, like putting the assets, and also like the equities. So the money that you put into the business should not show as a loan, but equity, like money investing towards the business, correct?
There are 2 ways for you to represent the money that you put in the business. Normally it will be equity, right? Is shareholder contribution. That's equity. You can do it as a loan, but if you're gonna do it as a loan, make sure that it's structured as a loan, meaning that you're charging interest, right? Any loan will charge you interest rate. So you can do it either or, but if you do it as a loan, you're gonna still get your money back, but you're gonna get it with interest, and you put it as a liability. I see Tamara mentioned that, what if you're not making much? If you're not making much in the business just yet, then keep it simple. LLC, you automatically be a Schedule C, file that form until you already start generating enough income to set the structure of doing the S Corp. Okay.
And also, I have been emailing everyone the presentations. So if you have not received it, just shoot me an email, and I'll be more than happy to resend it to you. The emails, they may also go to your spam mail, along with the link for the recording, the presentation, and also the link to meet with our colleagues from branches, and along with the other Navigator spokes as well. So like I said, like, don't hesitate, shoot me an email. You know, we're family. So like that, I'll be able to assist you with any of the troubleshoots that you might be experiencing. Yeah, so everything okay, perfect. I don't have no additional questions. Yes, Nay. So
I see a couple more, but they
okay,
didn't put it in the Q&A. They put it in the chat. Let me see.
okay, let me see.
I see.
While you're pulling the questions, Yasnaya, I just wanted to mention that what participants could do is, if they would like to have maybe another workshop on or webinar on to elaborate on a couple of these main things that seem to generate a lot of interest, that's something that we can put together for them as well. There is a movement between, again, with the training that's happened, from education to training. So today, if you notice, it's gotten a lot more practical, right? So in terms of anything that's practical, it's always good to do something and actually, work through the details of it in some sort of a practice session.
Exactly.
Yeah, and if you really want to go personalized in terms of going over with your actual financials, by all means, register to meet with Yasnay one-on-one. It's confidential, so like that you're able to maximize and answer and ask those questions that you want Yasnay to assist you with. If it's not the taxable items, but in terms of assisting with the line item information for your books, understand them, so that you have that language of accounting when you're working with your accountants when it's time for the taxes. So like I said, we're here to assist you. So don't be shy. And no, we do not help with taxes. That's outside the scope of our services. But we could email you a referral list of accountants that can assist you in the taxing realm.
Yes, I unofficially provide some insights, but we don't provide official tax advice. But some questions are general enough, so I could just tell you what I see.
Yeah. And
Okay.
I've been getting some questions. No, I do not work for branches, or we work together. I am part of the Florida SPDC at FIU. So, but we all work together. So we have broken those silos, and we all one big happy family in this ecosystem. And then Stevens, the QuickBooks training, it's gonna be in person on the 30th, but shoot me an email. I'll put it in the chat. I'll be able to email you a webinar that Yasnay has already previously done in terms of the realm of QuickBooks. But I strongly encourage you to attend the in-person event, because right there you're able to get more hand-holding, more information, and more insight, so that your questions can be answered at that event.
Mhm.
It's also limited seating, so we do advise that you guys register as soon as you can. And for those that do register, please show up, because you'll be taking the space of someone else who could have attended in your stead. So I just wanted to add that.
For the QuickBooks, are we actually like having people use a computer, or is informational as well?
We would advise people to work with their devices. But again, if for those that don't have their devices, I think what you're providing with them would be enough of a guide for them to go back and hit the ground running.
Okay.
Yeah, and some people may have it already. Some people is looking to see if it is a practical expense. At branches, we will be providing some micro grant funding for businesses that need to have access to QuickBooks right away. So that'll be an outcome of those that would have attended the training this month, and particularly for those that's attending the training in person.
Awesome. Yeah. Awesome. This is exciting. I know. I mean, this is just the beginning. The fact that you're here, I commend you for that. It's an investment in yourself, an investment in your business. But I can tell you, based on my experience working with branches, working with this program, we're here for the long term to support you in this journey. So this is just the beginning. You're gonna get a lot of it with our support to make sure that you're implementing and setting things correctly. So let's do it together. Awesome. So yeah, we speak Spanish. I speak Spanish. I'm Cuban, born and raised. There's a few more questions, but I'll be happy to, respond them one-on-one. And just very grateful for the opportunity. Thank you all for being here. Okay, this is the information again. If you're gonna get the slides, but I'll just leave it here for now. for now.
And then I'll pivot for Steve and Louis to do the closing remarks.
Yeah, thank you very much, Jesus. Yasne, trust me, we weren't surprised by the excellence with which you brought today's presentation really alive for everyone. We thank you for that, Yasne. Jesus, could not happen without you, my friend. Everyone, we really do want to give a lot of gratitude to both Yasne and Jesus for making today's presentation such a tremendous success. And on behalf of Louis and I, again, thank you so much for investing in yourself, investing in your business, and taking the time to be with us on this journey towards your success. So thank you again, everyone. See you next week. Have a good night. It was really wonderful having you guys here today.